AMC is up almost 10% on the day. This is a huge move, and I am very pleased to be seeing this. It's long overdue that we've seen a major bounce like this, but today's move is very weird and interesting at best because we are not seeing the short interest going down at all. We're actually seeing the opposite of the short interest shooting through the roof yet again today. So we're going to go over here in this video what is exactly happening with AMC today. This is incredibly bullish, as well as go over the technical analysis, like I said, the Ortex data and the stock O tracker data. But I also want to talk about the broad market because we are seeing some very weird things happening with the overall markets as well. And one thing that we do know for sure, if you did not know this before, AMC is going to correlate with the broad markets. So that is going to be very important. Try to predict what is going to happen next and what ultimately will happen next for AMC stock. So if you guys get value out of this video, hit that subscribe button as well as like the video, and make sure to check out the links down below in the description if you guys want to join a brokerage that does not use any payment for order flow whatsoever. Very easy to use, and it only takes about 2 minutes to sign up and receive one free share valued in between $7 and $1,000. Check out that link for public. Will Smith actually just invested in them. Kind of interesting, kind of cool. Check that out. I've been doing a lot of my trading over there, as well as the link for the buy and sell alerts in the pinned comment. So let's get into this information. Now, AMC is up 9.2% today. An incredibly bullish move. I'm not complaining whatsoever. It's just weird to see the Ortex estimates that they are giving us, because let's refresh the page yet again. And we're getting an estimated short interest of free float of 18.68%. These are the highest estimates that we have had for a very long time. Now, I know they are not 100% accurate. We are still looking at the short interest that is well over 20%. But the Ortex estimates as of late have been very, very conservative. So they have been very much to the downside. So this is one more confirmation that AMC short interest is well over 20%, as high as even 25 or 26, 27% when we do get the exchange reported short interest history and the data that will ultimately come out in about 1 week's time. But what is very weird about this move today is that you should at least be seeing the short interest change going down. So you should see the estimates at least going to the downside. But this is bullish because we're not seeing shorts covering today. Return shares of 1.13 million, borrow shares 2.93 million shares. That is a borrow change of 1.79 million shares that have been sold short today. So we are eating up these shares that they are shorting. This is incredibly good. What I ultimately think is happening is this is due to the option chain, the trading algorithms that are bidding up all of these stocks today, as well as almost seeing a technical breakout. And a lot of these people that have sold out of AMC, I don't think, apes sold out of AMC just because we were going down. I do think there was quite a bit of people on margin that were forced to sell. And once these people got their margin situations figured out, they are now buying back in, and we are eating up that short interest that has been being added to the stock today. Now, let's talk about the charts a little bit more, and then let's dive into a little bit more of the stock O tracker data. So we are seeing volume for the day of almost 40 million shares. Now, if you guys are unfamiliar, the only three things that matter with AMC and technical analysis, some people say, hey, you don't do good technical analysis. Well, with AMC, you can't do good technical analysis. You can have all the technical breakouts you want. We used to go over that all the time. It never pans out. The three things that have always remained very true and very accurate and have given us a good representation of what is going to happen next are support and resistance levels, that categorized into one thing, the moving averages, the 50-day, 100-day, and 200-day moving averages, as well as the volume. Those are the three things, the only three things that are important to look at as far as the charts are concerned. So where is support and resistance, moving averages, and volume? Like we said, the volume at about 40 million for the day. So still not very high, and we don't want to see the volume very high. The fact that we're seeing 40 million for volume and the stock is up 9%, that's incredible. Once you start to see hundreds of millions of shares be traded on any given day, like we've seen back here in January and what we've seen in June, that's where you see the real rally come into fruition, or even what we've seen back here when we've seen in between 100 and 200 million shares traded on any given day in late August, early September, and we've seen this major rally from $28 to $53 per share. That's what you want to see, low volume heading into high volume, and that's exactly what I think we are set up for right now. So as far as the moving averages, the 50-day, the 100-day are well above where we are at right now. The 50-day is at $37.85 per share. The 50-day or the 100-day is at $38.81 per share. But the 200-day moving average, which is our lowest one because this is the running average of 200 days. 200 days ago, we were, $8 per share. So you guys can tell that's going to be a lot lower than the 50 or the 100-day moving average. That is at $31.52 per share. So we are about to break this right now. And this has been a major resistance level, hitting this 3 times, and hopefully by the end of the day today and in after hours, because we're about to close the day right now, then we will be above this. If we are, we should get another boost closer to about $35 per share, because after all, shorts are not covering today. We still have 20 to 25% of the overall free float that needs to be covered. And depending on what happens with the markets, that could help squeeze out shorts, or it just could give a boost to AMC in general. Now, as far as what is also causing this move today, besides obviously the people that sold out of the stock that are buying back in, and potential breakout that we're seeing in trading algorithms that are pushing up the entire stock market today, specifically recovery stocks like AMC, we're also seeing puts that have ran from into the money, out of the money with only a couple days left to expiration, and we're also seeing a lot more calls that are going from out of the money into the money today. And you guys don't even really need to hear this, but when puts run into the money, shorting happens on the overall markets to hedge those puts. When they go out of the money, obviously they get de-hedged for, and that consists of market makers buying shares to de-hedge for those puts, and vice versa. When calls go from out of the money into the money, that causes buying power from the market makers as well. So you're seeing a lot of market maker activity today on 2 fronts, right? The puts running from into the money, out of the money, and the calls going from out of the money into the money. Might sound confusing, but it's pretty straightforward. So that is definitely a great sign. For December 17th, we do have that Fed meeting December 14th and 15th. We're not going to hear any crazy information until then. And after that, that's really going to be where we see market direction. Are we going to take another downturn? Are we going to rally up from that? Are we going to see a real end of the year rally, a Santa Claus rally that comes to the marketplace? If we do see a Santa Claus rally, we're looking at the potential for 29 million shares to be hedged for by December 17th, and already what we're looking at that will have to be hedged for is 2.76 million shares that will have to be bought. And if that rally does come, you're going to see 72,000 puts, 7.2 million shares potentially that will have to be de-hedged for, aka will have to be bought on the open market to de-hedge for these puts. Incredibly bullish. But for January 21st, 2022, I think you're going to see a lot of volatility overall from December really 16th after the Fed meeting through January and February. You're looking at 121,000 calls that are in the money, 348,000 calls that are out of the money. People are not selling out of these calls. They're diamond handing the calls as well, which all in all controls almost 50 million shares that will have to be hedged for if all of these calls run into the money. And right now still, about 12 million shares that will have to be hedged for if AMC stayed this price by January 21st, 2022. So incredibly bullish overall. Now, let's talk about what is happening on the overall marketplace, because we are seeing a lot of Omicron fears that are dying down, but this was only the 3rd biggest fear catalyst. The 2nd biggest fear catalyst is the debt ceiling, and we are getting a lot of headlines that the debt ceiling, right here, I'll just read you the headline. It says, Democrats' new plan to raise the debt limit will rely on some help from Republicans. They are trying to do this by the end of this week. That is the 2nd biggest fear catalyst that is going to be potentially off the table. That is going to be huge. And then after that, all we have is Fed Jerome Powell. If he takes that dovish stance, which obviously the markets are pricing in today that he will, you're going to see that end of the year rally. And why I say the markets are really pricing in a dovish tone for Jerome Powell's meeting, the 14th and the 15th is because you're seeing a risk on situation, whereas we have been seeing a risk off situation. And that means that basically your Dow Jones is your more stable companies that doesn't really care what happens with the Fed, if they raise interest rates or not. These stocks don't raise capital, so it's really not going to affect them all too much. That would be your risk off situation where people pile into the Dow. You're seeing the opposite of that today. You're seeing people not piling into the Dow as much as they are the Nasdaq. The Nasdaq is up 3.06%. The Dow is only up 1.5%. S&P usually is in the middle. They're up 2%. The Russell 2000 up 3%. So you're seeing a risk on situation. Investors are pricing in a more dovish Jerome Powell, or to put this in simpler terms, an end of the year rally. So all in all, this information is incredibly bullish. Next stop for AMC, definitely watch to see if we can break above this 200-day moving average. We have at times today, but it's been really hard to stay above this. We need to see that break above that by the end of the day. If not, the next couple of days throughout the rest of this week. And then watch for $35 would be our next stop. And then a lot of resistance is going to come around the 50-day and the 100-day moving average until we ultimately make our way above $45 to 50, 55, and 60 and straight to Pluto. So that is going to be all for this video. Hit that like button for me. Consider subscribing to the channel. Let me know about why you think AMC is up 9% today. It's certainly not shorts covering. Do you think it's the options? Do you think it's hedge funds buying the stock? What do you think is going on? Your opinions are very valuable, and love and appreciate you guys. Thank you for watching this video. Make sure to check out the links in the description of this video, as well as the 2 links in the pinned comment. So love and appreciate you guys. Like I said, thank you for making this possible. Thank you for watching these videos. I hope you guys enjoy the rest of your day, and I will see you in the next video.